welcome to the first Market Matters video update for 2022. Happy New Year to everyone joining us, to our subscribers at Market Matters. Thanks for joining us today, James. Good to see your face. First time this year, Jimmy.
Happy New Year, Harrison, and Happy New Year to all the Market Matters subscribers watching the video. I hope you had a great one. Obviously, we're working a little bit half remote, half in the office at the moment with a rise in COVID cases in Sydney. Anyway, it seems like a bit of the norm playing out for now at least. So hopefully we get over this bump at some stage very soon. But Harry, good to be back and raring to go for 2022.
Definitely. Before we look ahead, we have to look backwards, James. First video of the month, so we're going to talk about performance to get things going. Growth portfolio had a pretty good month in December, James.
Yeah, we had a mixed month right across our portfolio. So if I look at the broad brush strokes that helped and hindered our portfolios, technology was weak. So the portfolios that are skewed to technology underperformed, and the portfolios have got a higher tilt towards resources did better. So the growth portfolio for December was up 2.78%, a performance that was slightly ahead of the market in accumulation terms. So we're happy in terms of that portfolio. The market was a little bit stubborn in December, so we're positioning for a Christmas rally. It did eventuate right at the back end of December, probably not as aggressive as we had have hoped, but still the portfolio performed pretty well, and we're happy with how it's positioned going into 2022.
Yeah, moving on. The income portfolio is up as well for December. Run us through what contributed to that one, James.
Yeah, that portfolio added 2.3%. So for an income-focused portfolio that's skewed between equities and income securities, hybrids, fixed interest securities, and the like, that performance, capturing the lion's share of the upside, whilst also this portfolio doesn't capture the lion's share of the downside. So that's what it's all about. A couple of things that stood out in that portfolio: hybrids, as I wrote this morning in the portfolio report, yields spreads, I should say, contracted in the month, which pushed prices higher. So we're seeing a reasonable amount of volume going into floating rate notes, and that's obviously benefiting the hybrid prices there. That makes sense because obviously interest rates are rising. If you look at the last 12 months in more traditional bonds, which are fixed rate securities, they have seen weakness in price because yields have gone up. So it makes sense to skew portfolios, in our view, to floating rate notes, and hybrids fit that bill. So they are pretty strong across our portfolios, and also some of the resource stocks help performance. One standout at the back end of the month was AGL. It's a recent purchase that's doing pretty well since our purchase, Harry.
Yeah, definitely. It's kicked off the new year in a pretty good fashion as well, AGL has. You made mention of the sort of the tech weakness in December, sort of weighed on the emerging companies portfolio. That one had a tough one, sort of gave back a little bit of the strong performance it had through 2021.
Yeah, it was down just shy of 2.5% for the month, and you rightly pointed out it's tech exposure that hurt. Small caps also had a tougher period than the large caps in December, but it was very much how we were positioned around the technology space. So if you think about what we're trying to achieve in that portfolio, it's all about targeting emerging companies with really strong growth prospects, and that happens to largely be in the smaller tech space. It's not only in that area. We do have commodities exposure and a bunch of other industrial exposures in there, but tech is a heavy weighting in that portfolio. So it hurt for December, but again, we're seeing that bounce back reasonably strongly. We are looking to reduce our technology weighting overall throughout over the next 6 months or so. So keep an eye out for that. But that portfolio down marginally in December, Harry.
A few switches coming up. Looking more international, the international portfolio, the ETF portfolio, had to deal with a lot of AUD volatility in December, James. But how do those two portfolios pull up?
Yeah, I was running the numbers. I was doing some portfolio reports for our managed portfolio services clients through Shaw, and we do these on a quarterly basis, and looking at and we hold international equities in these portfolios, and looking at the volatility in the Aussie through the last quarter of calendar 21, and the Aussie was trading in about a 10% range. So a huge amount of volatility in the Aussie dollar, which played into or impacted the returns in the international component of portfolios. For December, the international equities portfolio, the Market Matters international equities portfolio, was down 1.86%. A couple of stocks that I wrote about this morning really weighed. So Alibaba and JD.com. These are two China-facing e-commerce businesses that really suffered at the back end of the year, but they've bounced back strong. There's been a lot of well-known investors who have sort of put their hands up and said China is all too hard. We don't agree with that, and we think there's probably more growth available in China, particularly in the consumer area, than these stocks are pricing at the moment. So we've held our nerve in those stocks, and they've bounced nicely at the start of calendar 22. So that portfolio, to me, looks. I'm happy with how it's positioned despite the weakness in December. I think it's positioned pretty well for the start of calendar 22, Harry.
Yeah, you can't kick off the first video of the year, James, without talking about the year ahead. Where you may mention a few, you're pretty happy with how the portfolio is positioned. You think that maybe we need to cycle a bit out of tech, but what are some big themes that we're going to focus on in 2022, James?
Yeah, I think we've got two areas that I focus on from looking ahead for the year. Obviously the markets, and then what we're going to do from a business point of view at Market Matters. So just in terms of the markets, we're going to release a 2022 outlook piece very shortly, either this coming Monday or the following Monday, depending how it takes shape. So, I think this year, in a very broad brush sense, is going to be more volatile than the last. Last year was a strong year for equities. I think some of the changing dynamics, particularly around central bank support and central bank policy. We've had sort of peak stimulus. We've had peak ease in monetary policy. So I think that sort of tapers off in 2022. So for mine, I think the market's still got good momentum at the start of this year, and then we're likely to move to a more defensive or increase our defensive positioning as the year progresses. We've actually done in the growth portfolio today. We took one move that is aligned with that view. I know it's only early on, but we sold Fortescue, took a decent profit there, and bought Goodman Group today. So, that sort of speaks to how we're thinking about portfolios. Selling strength, as I've been writing about, selling the pops is really going to be key in this year, and just edging into more defensive positions into weakness will be our overall stance from a portfolio perspective, but we'll put our 22 outlook piece out very shortly. In terms of the Market Matters business, I think it's going to be another big year in that respect. So 21 was a really big year in terms of the development of a new website, client management systems, really right-sizing our business for future growth. So this year we've got some really interesting technology developments that are going to come through from the website perspective. We're working to improve the data environment for the website to bring in more active pricing, etc., around the portfolios, more significant content from a fundamental point of view. So look, stay tuned. I think it's going to be a really positive year for Market Matters. Really stoked to have so many new subscribers come on board throughout the December promotion. So welcome to all of the new subscribers out there. And Harry, we're primed, as I'm sure you are, and the rest of the Market Matters team, for a very solid 2022.
Yeah, definitely chomping at the bit, James. Good to join you here today, James. Let's look forward to a big 2022, hey?
See you later.